This session will start with us focusing on powering Africa, providing the continent with the energy that it needs to actually deliver the growth potential that we all know that continent has. My name is Richard Putley, and my job today is to act as chairman for this session, which will run between now and then we're breaking at 11:30. In this session, we'll also be covering, towards the end of that, starting our sessions on sustainable growth. So there will be a panel at the end of this session, which will be covering sustainable growth. Our first panel is a mass before us, and will be moderated by Jonathan Berman. Jonathan has over 35 years' experience in financing the energy, infrastructure and resources sector in Africa, as well as other emerging markets. He's headed Barclays African Investment Bank and Deutsche Bank's Johannesburg branch, served as a non-executive on the boards of ICs of several African funds and exchanges, and has advised many of the continent's pioneering energy projects. He founded Autonomi Capital in 2019. Jonathan, if you'd like to come on and introduce your panelists. Thank you.
Good morning, Richard. Can you hear me okay? Right. Well, obviously, we've solved the energy access problem in the room, or there aren't that many people here. And I have to say, I've been at a couple of energy panels here at AFSIC, and this is the smallest turnout we've ever had, but it may be the time of the morning after a very good party last night, I don't know. Before I bring the panel up and introduce them, I will just, though, ask for one show of hands since it's early in the morning. And I did this 2 years ago at AFSIC. And it was in the context of utilities, maybe rather than distributed energy. And most of the panelists here are interested in distributed energy, which is a key part of the energy access solution. But I asked the question of how many people in the room thought that the financial standing of African utilities was going to get better, stay the same, or get worse over the next 5 years. And people didn't want to stand up and be counted. That was fine. We just had a show of hands. Anybody want to try that again? And how many people think the financial standing of African utilities over the next 5 years will get better? Okay. Anybody? Thank you. Anybody think they're going to get worse? Okay. And stay the same? Okay. So I will tell you, 2 years ago, nobody said they were going to get better. 2/3, roughly, and it was a full room, said they were going to get worse, and about 1/3 said stay the same. So maybe we made some progress just on the voting so far. But clearly, I say that not just humorously, because it's a huge problem for utilities themselves raising capital and for large IPPs dealing with utilities, that the financial standing of utilities is challenged. And a key part of that solution is obviously decentralized energy, which can either bypass the utilities or rely on them rather less in creating new business models. So I think that's what we're going to hear a lot from the panel today. So why don't you all come up, and I'll introduce you as you're sitting down. Thank you. So I'll start with introducing the panel from the far left, Roland, who I've known for many years through a number of investment spaces in energy and infrastructure, but who's here today as an advisor to Yellow Door Energy, which is a developer, I think, particularly of solar, which has been expanding in Southern Africa recently. Next to Roland, we have Emma Gordon, who's probably the only person here who's not an investor or financier, but is looking at the whole sector from the International Energy Agency, and Emma will give us a bit of an overview of how they see the sector. Next to Emma, we have William Brent from Husk Power Systems, who I think is going to tell us about a significant capital raise that he's recently managed to pull off, which is a great contribution to the sector. And then sitting in the middle, Zerubabel Junior Kwebiha from ENGIE on the energy access part of ENGIE, which is obviously a very large utility as well as doing distributed energy. Next we have Michelle Osorio from KawiSafi Ventures, an equity investor in the space. And last but not least, Nico Tyabji from Mirova SunFunder, who's a specialist debt provider to the sector. So I think a really nice mix of people involved in the sector at the moment, all doing things across the region. But as I said, maybe we could ask Emma to just kick off with an overview of how you see the energy sector at the moment.
Sure, thank you very much. So at the IEA, we're one of the custodians of energy access data, so a good place to start is probably just the need and the investment need to date. So at the moment, there are still over 600 million people, 40% of the population that lack access to electricity in Africa, 70% of the population, nearly 1 billion people lacking access to clean cooking. So when we look at the investment need to achieve SDG 7 and reach universal access by 2030, it's around about $25 billion per year, every year from now through to 2030. If we look at the level of investment today, it's less than $5 billion. We have seen slow progress prior to the pandemic, where we saw a bit of a step backwards, but we're still obviously far below that need of 25 billion per year. And I think when we look at that number, some interesting ways to break it down are thinking about, firstly, where does that money need to be spent, how affordable is it, and then who can provide that capital. So thinking about where it can be spent, we do geospatial least cost analysis to look at the different technologies that can be used to provide people access as quickly as possible. In the electricity space, it's about 40% of the new connections are grid connections. Obviously, that raises questions that Jonathan highlighted around the health of utilities and the models that could be used to actually achieve grid level access. In rural areas, which account for about 80% of the communities that lack access today, we see mini-grids and standalone systems playing quite a dominant role. So over 30% of the new connections, mini-grids, and just under 30% in standalone systems. When we're looking at clean cooking, I think clean cooking often gets forgotten. It's 3 to 4 billion of the investment need. There we see improved cook stoves accounting for about 40%, and then LPG making up a large share, around 35%. I think in terms of access, it's really important, and I'm sure the other panelists will speak on this around the affordability question. We've done some analysis looking at, based on those different technology splits, how affordable would these solutions be for new households gaining access. Based on our assessment of affordability, which is whether a project accounts for less than 5% of household income, we see with the current subsidy regime that only about 50% of electricity access projects that provide just basic services, so a light bulb, phone charger and a radio, only about 50% of those projects would be affordable for the end user. And that obviously has implications not just for the viability and usability of for the users themselves, but also the commercial viability of the projects. When you look at clean cooking, the numbers are even lower. And so then I think the final point to raise is then where can this money come from? And it's quite clear that, especially as we move closer to the goal of universal access, it's the harder to reach communities that need to be connected. And grant capital, subsidy capital, concessional finance is very important here. So across the clean energy space, the IEA did some analysis looking at the role of concessional capital to de-risk private capital, and we found that obviously that's an essential role, but it needs to increase about tenfold if we're to reach the level of private investment that we see by 2030. That's not just within the access space, but across clean energy as a whole. So it's quite clear that there needs to be a big shift, and again, I'm sure the panelists here have a lot of experience of working both with sort of public and private capital here. So to reach that 25 billion, it's quite clear that we won't hit that this year, and obviously that makes the need greater going forward to 2030.
Thank you, Emma. So clearly there is a challenge across the region, but my first question to the panelists would be, within all of that, how do you decide how to focus? I know some of you are focused on particular countries or subsectors, but how do you or your businesses decide with that focus? Roland, if you could start, please.
Right. Before I answer that question, I think this is part of the problem from the private sector's perspective, in that private sector focuses on the countries and the sectors that are likely to generate a return. And that necessarily are countries that have a little bit more scale, potentially obviously with an opportunity set, but potentially with a higher level of GDP. So the private equity-backed companies that I've worked with for the last 15 years or so tend to be focused more in the areas that I'm looking at, which is sort of 200 kilowatts to multi-hundred megawatt opportunities, and these can be distributed, they can be grid connected, tend to be focused on the larger economies like South Africa, Kenya, to a certain extent Nigeria, Ghana, and most of the East African countries actually, and one or two in North Africa. And therein lies the problem, I think, because then you have the majority of the continent that's underserved by the private sector. I know some people on the panel are invested in countries that I haven't mentioned, but the private sector itself is not really geared up, I don't think, to invest in the majority of the continent. And I think that's where the concessional finance comes in, and the disconnect between private capital risk appetite and the money that's actually available to stimulate energy access across the continent.
Thank you. William, I know you're also active in quite a few countries. How would you decide which ones to focus on?
I think it's largely driven by our ability currently to get a return on our investment. We have investors who expect a return. I often refer to the top of the bottom of the pyramid is where we're focused at the moment. And the goal, of course, is as we achieve greater scale that we can drive our costs down and then move from the top of the bottom of the pyramid to the middle of the bottom of the pyramid, and then hopefully further down the pyramid. But we need to make a profit and show that we're profitable first and foremost. And we are doing that in easier to reach communities that have more economic activity. They're still off-grid, and we're making a huge impact on people's lives, but they're not the hardest to reach. So I would say that we are looking at the larger markets that have a relative amount of economic activity in rural communities, population density that we can also count on. We have a very elaborate scoring system, in fact, for the communities that we do decide to invest in, that we've honed over 15 years of being in business. And that allows us, with a lot of certainty and confidence, to build assets, invest in those assets, knowing that we will, at the unit economics level, get a return on that. But again, the long-term vision is to really scale, which is what we've now achieved. We've got about 200 mini-grids in operation, and we want to get to 1,600 in the next 5 years. So if we can get to that number, or even 1,000, that really gives us the economies of scale to then drive our costs even further down. We're at about a 27-cent per kilowatt hour LCOE right now, and we want to get that down to about 20 cents in the next 5 years.
That's a very interesting number. We'll talk more about that.
Yeah.
So, Junior, I mean, your company is global, but your personal focus is on Mozambique. What attracted them to focus on Mozambique?
So there's definitely the need, but like William has said, it's a very delicate balance to play. Mozambique, specifically as a country, is extremely difficult to electrify. So we are sure the grid is not going to get to every area. But one of the things that we've taken a slightly different approach to what William has done is to go with an integrated approach, to try and hit the top of the bottom and the middle almost at the same time with the offering. So go in there with both solar home systems and the mini-grids as well. There are lots of other things that come into play, but of course some of the things is also the financing. It was very de-risked going into Mozambique, and now the discussions are really with the government in terms of a much longer term partnership, whether it is concessions and exemptions, which makes it a lot more sustainable. So there is definitely the opportunity, the need is there, I think, in terms of picking locations. If we're going to say energy access, we cannot shy away from, we're going to go into countries that have problems with infrastructure and payment systems and everything else. If we're going to solve that problem, we're going to go to countries that have got problems. So it's how can we be more effective, more efficient as we go further down?
Right. Michelle?
Thanks. I am Michelle Osorio with KawiSafi Ventures. We're a late venture, early growth stage private equity fund investing in energy access and climate solutions across sub-Saharan Africa. Our Fund 1 had a clear East Africa focus where a lot of the energy access activity was coming out of when we started back in 2016. But really based on where we've seen our portfolio companies and others in the sector growing over time, we've expanded into a broader sub-Saharan Africa mandate. And for us, it's very much, I think, both top-down and bottom-up in terms of where we see the need, where we think there are investable opportunities, opportunities for impact as well. We're very focused both on the social and environmental impacts of our businesses. And also bottom-up, really, where's the pipeline, where are great companies, where's the opportunity to build excellent companies that can continue to serve this market for a long time. So our current portfolio, I would say they're quite regional in nature. They usually start in one or two markets and then are expanding from there. So we're really excited about as we expand our focus a little bit to kind of have a broader coverage in both East and West Africa.
Yeah, that was a really interesting point I think you made about you focus on East Africa because you saw the companies active there. There were immediate opportunities, I guess, rather than, because it's something that's always fascinated me about particularly the solar home systems sector, that it really started in East Africa. It's not as if there wasn't demand in the rest of the region, but that's where people got going. Was that the way you saw it? Or?
Exactly. So some of those early companies that were, our earliest investments were companies like D-Light and V-Box. They really started out of Kenya and out of East Africa. And from there have grown organically into other markets. So I think we as an investor are kind of learning from that growth. But now we see it going both ways, right? We see innovation coming out of East Africa into other parts of the region, as well as innovation coming out of West Africa coming across. And looking, both at residential as well as commercial and industrial solutions, kind of following the market a bit, and where we see those sort of next interesting companies coming.
Right. So, Nico, debt is traditionally the most risk-averse part of the capital structure. Does that also affect which countries you'll go into, or is it more the volume of opportunities issues like the equity people have spoken about?
Certainly both. I think we used to be very focused on the energy access sector in East Africa for similar reasons. That's where a lot of the early companies were. Mirova SunFunder was the first mover in providing debt financing solutions for these companies about 10 years ago. So that's where we really built our operations and most of our investment focus has been. We're currently investing out of currently $200 million blended fund. Speaking of how you connect the private capital and the concessional, I mean, part of the solutions that this sector's come up with is really through these blended vehicles like KawiSafi and our funds as well. But we've really had to go a lot broader with the scope and mandate of that fund. So it's now emerging markets broadly. We're still expecting most of that to be in sub-Saharan Africa, but increasingly not just East Africa, and certainly increasingly not just energy access. And I think there's definitely the returns side of it, but frankly there's also the risk and the absorption capacity of the companies that are in the market. So there are relatively limited opportunities for larger ticket investment on the debt side. And maybe there's a kind of positive story there as well, which is that 10 years ago there really weren't any options, which is why plucky SunFunder came along as a startup, originally a crowd lending platform. And now a lot of these companies are pretty well served debt options. Whether or not it's the right kind of debt is another question. And to Will's point around the right kind of capital. But it does mean that there is maybe an oversupply on the debt front in some respects. Equity, of course, is a very different story.
Maybe shift away from country focus or area of emphasis to business models for distributed energy, because it strikes me there are quite a few here represented on the panel probably, and the boundaries may be shifting. We've had mini grids, we've had microgrids, we've had various iterations of them. We've got solar home systems totally decentralized. We've now got certainly I know we see it in South Africa, and I think we're going to see it in other countries that are reasonably well grid provided. We've got home systems for people who are on the grid as backup. We've got C&I generation, which again may be for companies that are not on the grid or those that are on the grid. Anyone of the panelists like to sort of tackle that and why they focus on those particular bits of the business, and where you think it's going as well? Anyone like to have a go at that one?
I can start. I mean, I think that even within our industry, we're a mini grid developer, operator, owner. There's differentiation between business model. Some of our competitors only do power supply. That's all. That's what they've decided to do. They don't want to do anything more. What we found over the 15 years of our company is that if you're going to go into rural communities and just sell electricity, then you're definitely going to be serving the easier to reach, because you can't make a business out of just selling electricity in most rural communities. So what we've had to do is essentially become a rural development company, where only 25% of our revenue comes from power sales. The other revenue comes from appliance sales and financing. It comes from energy services that we introduce to the communities, e-mobility, leasing and battery swapping, agro-processing, et cetera, and from rural C&I. So those four things together create a viable business for us as a mini-grid company. And I think allows us to eventually, as I said earlier, move into harder to reach communities, because we're addressing the demand side as well as the supply side. And that's a critical insight that we came to, which was that if you don't address demand, you're never going to get the supply to the level that you need it to actually sweat that asset to where it needs to be. So, I think that, but there's a spectrum. Some are moving to C&I because it's easier, it makes money. Others are just doing power supply. So, depending on what you choose, you're laughing because I said C&I is easier to make money. Well, yeah, I'd love to hear more about that. But no, so there's a spectrum. We've taken probably the harder path, but we're profitable.
Right. And I guess the answer is you also persuaded your investors to give you a degree of operational flexibility to move into those different areas.
Yeah.
I don't know if other people, obviously funds tend to have more of a mandate, but if other people found that an issue that your investors gave you money to do one thing and then you found you wanted to do something else? Anyone like to comment on that? Junior, go first. Or maybe
definitely. I think the more you engage with the customers, the more you see different opportunities. The way we look at it also is it's a very high-touch business. You're installing in customers' homes. You have a relationship with that customer. You only keep learning more about that customer. I think it comes down to what other opportunities can you leverage after you've made all this infrastructure investment, and whether it is the pipeline to the customer's home. So that begins to become what else can you do, and to partnerships, can you do something with telcos? One of our partners once said, can we turn the device into a data, some sort of Wi-Fi hotspots in rural areas? So there's opportunities because of the infrastructure that has been laid out. It doesn't have to only be energy. And I think it now begins to create an interesting discussion in the room, which is how much innovation is there outside the energy? And what kind of partnerships do we want to have? How much can we get telcos in? So there is that element as well. Like William said, I won't say it's the C&I is the easier side, but there is definitely opportunity if we can begin to leverage. If we say we've built the rails, we now need to ride them with other, whether it's insurance. In one of our markets, we're doing school fees loans, because we realize customers with a pay-and-go model, they won't pay during that week or month when they have to pay school fees. Wow. Then you're offering school fees loans as an incentive to better paying customers, which is good. And you're giving out, in one country, about 15,000 loans every school term. And that's less than 10% of eligible. So that's an opportunity, but because of the rail that we've built into that customer with that relationship. So again, how much innovation can we birth out of that?
Nico, I know you wanted to comment on that.
Yeah, I mean, just the concept of easy, I guess there's maybe not easy, but there's hard and there's harder. And certainly, yeah, we see this kind of, this pressure within the opportunities we look at. focus is really important, and of course it's something that for the investability of the opportunity, if you like, it's something we look to as well. So as much as we certainly need innovations and innovations to be funded to kind of address some of these business model challenges, whether it's the core economics of mini-grid projects or trying to build track record in newer sectors like cooling and e-mobility. If you kind of need to see that focus within the individual companies and those business models as well, because ultimately it hits the bottom line, right? And it always comes back to what kind of capital is available for solving which kind of challenges.
John, I think fundamentally the electricity model until about 15 years ago hadn't changed for 100 years. It was all about moving electrons and molecules are the fossil fuels, and the electrons are obviously the grid and how you move those around. And the planning that was behind that was established in the late 19th century, and it basically didn't change an awful lot for 100 years or so. And then when the variable renewable energy came along and became cost competitive with fossil fuel, things started to change quite rapidly. And I think the whole world is going through a massive, the word transition is overused, but massive learning curve about how to integrate these variable renewable energy and potentially hydrogen, which is a different kind of molecule, into a system that hasn't changed for 100 years. And a lot of that experimentation that's happening is happening on the continent. So the old model wasn't fit for purpose for Africa. The grid system, centralised power plants, fragmented population centres that are relatively poor. The new model that has distributed energy that you can place pretty much anywhere, and most of Africa has pretty good solar, if not wind resources, presents a massive opportunity for everyone sitting here on the continent itself, but also a massive problem in terms of planning for countries. And I think that's where part of the issue arises in terms of energy access, is how do you plan for integrating the old model with the new model? And what we're seeing certainly with governments is they don't know how to integrate the old model with the new model. And that opens up opportunities for the private sector, but it also means there's a lot of challenges that are presented, and people are learning, we are learning as we develop these models. But what's interesting, I think, is that a lot of these models, as I say, are being developed in Africa, and there's a lot of learning that's being established in Africa that will be transferable, not just to other emerging markets, but to developed markets as well. I know, as an example, a lot of European countries that are struggling with the integration of variable renewable energy are looking to countries like South Africa that are really pushing boundaries of models and struggling, but pushing boundaries of models and seeing how they develop in order to develop their own system. So there's a massive fragmentation of models in the market at the moment, and we don't know which ones are the right ones and how to integrate them all. But it is a big opportunity set, and it's quite an exciting place to be at the moment.
I think that's a really interesting theme. Maybe Emma, again, with your regional overview, are there particular markets where you think the regulators have really embraced this kind of change?
Yeah, I mean, I think this is a difficult question. What we see is there's a lot of policy gaps on the continent, and again, all of the practitioners here on the panel will be fully aware of this. Many countries on the continent have targets set, for how they would like to achieve energy access, but not necessarily an integrated energy access plan. And I think within that, what's also helpful is to identify what type of systems they would like to see in which areas, where you would like to see the private sector come in, and really helping to kind of identify those opportunities, not just where the grid will go, but also to provide a lot of data on the types of communities, the types of economic opportunities there. So we do a lot of work with governments on data training, improving the models that they have available, but also thinking about the other pieces of data that are useful to help identify those opportunities. So I think the point that you make, Roland, about this being a big change, I think it's something where many of these governments are now on the front line of coming up with the best strategy for these approaches. And I think we're seeing that growing. Obviously, Kenya is cited as an example where there's been very rapid progress for a variety of different reasons. Côte d'Ivoire is a good example of where they have a very centralized approach, thinking about how to use the grid. So there are sort of bright spots on the continent, but I think still a lot of work that needs to be done in terms of coming up with these really comprehensive, integrated energy access strategies.
Yeah, I guess just one quick addition. I think an area where we see real room for policy development and improvement is in the carbon finance space. We see that as a huge opportunity for the sector. You certainly mentioned clean cooking earlier. We've seen a really transformative impact in the ability of the sale of carbon credits related to clean cooking, driving down the cost of those units and really increasing the access to them. So driving tremendous health and environmental benefits, but there is some ambiguity in how certain markets and how certain regulators are working with the carbon finance models. So I think that's an area where we'd love to continue to see more clarity because we think it could have be a positive set of resources for the energy access sector.
Right. Any other good examples? You don't have to name and shame the bad ones, but good examples of regulatory, and let's use regulatory, I guess, as Michelle did, it can be global regulatory stuff like carbon policy, or it can be local in-market regulation. Any good examples people would like to talk about?
I mean, our primary market in Africa is Nigeria. And they have quite a robust regulatory and policy framework for our industry, the mini-grid industry. They actually built a lot of that off of state legislation from India and improved on it. And they also have an energy transition plan that's picking up some momentum. They are a private sector-led market. Which is very different from many other countries in Africa, which are public sector led, and you have very different dynamics in those markets, as you can imagine. I think it's a cautionary tale from India that Africa still hasn't learned yet, which is that public sector led mini-grid programs, like you're seeing in many countries, are pretty much doomed to fail. India has thousands of mini-grids that were state funded that are now sitting useless. As opposed to the hundreds of private sector mini-grids that are doing quite well. So I worry about that, that we're going to have to relearn that lesson all over again. But I think Nigeria is a good example of also combining centralized and decentralized. We're already starting to have agreements with the distribution companies in Nigeria that are essentially saying to the private sector mini-grid developers, we don't like this area of our service, concession. We're going to franchise this to you. You can build a generation asset, take over the distribution, and we'll form a three-way partnership between the DISCO, the private sector mini-grid developer, and the community that's being served. So hopefully that also, that type of experimentation in integrated systems will actually lead to some success stories that we can then build on.
I've got one more question to the panel before we turn to the floor, and this is about sort of grants and soft money. I think we all agreed, based on the chat we had before this panel, was that we'd all like to see more soft money in the broadest sense. Could be grants, could be soft loans, soft equity investment. If you had to appeal to that community for one change in your space, what would that be? What would you like to see more of? Nico?
Well, I think we are seeing more of what we need, and it's a question of the pace that this comes through. But for instance, Nigeria is a good example where it was the first kind of mini-grid public-private partnership at scale, if you like. And it's certainly for the mini-grid sector, this is infrastructure. It needs public funding in there. It's not going to be done entirely by the private sector. And we are seeing those kind of approaches rolling out in different countries. There's a large World Bank effort on this, which we're watching with interest. And I think the private sector is there for it. So yeah, more of that coming through. I think there's also then the kind of specific kind of enhancements that are needed to ensure that those kind of public-private partnerships can come through. So, I mean, just taking mini-grids as an example, we want to be doing the longer tenor project financing for mini-grids. We've only been able to do shorter term financing kind of backed by the public element, if you like. And the biggest risk for us is how demand grows with these unknown grids and unknown locations. So having the right kind of guarantee mechanism on that demand risk, very specific, maybe a small part of the risk, because the whole principle of this is build it and they will come. Right. But we do need help to see how that can come through.
No, and I think my personal experience has been, when you want a tailored instrument, it sometimes takes a while with the funders to get their heads around that, because they're used to certain products, and you've identified the need in the market. They may or may not be ready to provide something that's specific. That's an interesting one. Michelle, what about in your area? What would you like to see more of?
Yeah, I think we're seeing very targeted uses of philanthropic and concessional capital that I think can make really catalytic impact. So, for example, blended finance structures into funds like ours, that catalytic capital helps us to attract other investors that have trouble coming into emerging markets very generally, and maybe more specifically into some of the sectors that we're in. We've also seen that at the company level. So rather than sort of a broad set of grants, how are you helping companies address those harder to reach consumers? So is that targeted programs in country? Is that targeted programs with partners that are addressing those? But looking at those customers specifically that are less economic to serve, how are we bringing in that concessional capital to reach those customers? So I think it's really kind of using those tools in a way that's targeted so that you can use the private sector capital for the parts that are more easily fundable by the private sector.
Julie?
I think that players in this space, from the private sector, I think we just need more people around the table. Distribution is expensive, irrespective of what you're distributing. It's expensive. We need to have the right people around the table. And what I mean by that is a lot of the grants have been RBF to drive the numbers up. But you've had numbers drive up, you have a pay-as-you-go model and not enough capacity built. So you've got the access, and now you've got millions of customers who are fatigued with payment, and many companies don't know what to do or how to deal with that part. So the element of, as you're growing, there is more capacity that has to be built. So getting a couple of people around the table, I think, for me would be quite important, especially because they are neutral brokers.
Yeah.
I mean, I think I differ slightly. I would say we need fewer people around the table. We have too many people in the kitchen. Is my perspective. One example: we are frequently approached by consultants who've been hired by development banks or DFIs. I had a call last week about the potential to create a new RBF, a results-based financing fund for Pan-Africa. And we already have 3 at least that I'm aware of that are very burdensome for developers like us who have to then go through the same process over again 3 times in order to access money. That's probably not enough money for what we need to actually build out our pipeline anyway. So I would love to see more aggregation as opposed to more dissemination. I'd like to see funders move faster. We do have good news to share, hopefully, in this quarter, which is that we're raising $100 million equity and debt to grow from 200 mini-grids to 1,600 mini-grids. But the speed at which that happened was far too slow. If we're all trying to end energy poverty by 23, 18 months to raise $100 million when we need $1 billion, that's not going to make a dent. So speed, and then I would also say that there's a lot of risk-averse behavior from a large section of the investment community. Even though they're supposed to have a higher risk appetite, many of the concessionary funders that we've encountered, I think, still are quite risk-averse. and I would love to see that risk appetite improve with specific KPIs around that, as well as transaction timeframe.
Right. Emma, I know you're not in the market in that same sense, but maybe I could ask you a slight twist on the question. Do you see from your statistics certain countries or areas where there is more grant money going in than others?
Yeah, sure, and I think this speaks to the point that William just made about risk aversion. You know, you see concessional finance going into the same countries where you see private finance focusing. And what we would hope to see is that a lot of these grants and concessional finance providers can go into the harder countries and that they can focus on the harder to reach communities. And I think there are lots of improvements to be made around the delivery and the access to concessional finance. And so on the blended side, that's really important to speed up that process. But also, what these grants and concessional providers can do is also focus on things like the pre-development financing to increase the amount of bankable projects that are available. They can focus on the unaffordable projects, on the countries that are very difficult to access. So I think for me, my sort of big wish for those finance providers is to take on more risk and to take on, really to own that sort of development part of their mandate, and then also to take when they're involved in the blended finance side, to let the private sector lead more in some of those discussions, because I think we often hear how difficult it is to access that capital, which really then slows down the process.
Gotcha. Thank you. And Roland, I know a big part of your focus is South Africa, a fairly rich country. Do markets like that need grants and soft money, and if so, where?
So I think if the goal of energy access is to alleviate poverty, not just energy poverty, but poverty, then there's some big changes that need to happen. And I think every country needs funding, concessional funding, grant funding, whatever you want to call it, that helps to drive a shift away from a fully centralised fossil fuel-based model to a partly decentralised but more pervasive grid model that is also distributed with variable renewable energy. And that needs capital to enable the planning to happen, and it needs integration, it needs collaboration between countries, because most countries are, the average, I haven't done these numbers for a few years, but the average sub-Saharan African economy is, if you take away the big four, so 45 odd economies, is $20 to $25 billion of GDP, with a tax collection ratio that's a tenth of what it is in the Western world. And if you look at those kinds of markets, they can't develop the kind of infrastructure that's needed to eradicate energy poverty, which includes the grid. And so there needs to be funding available to enable integration and assimilation of regional power plays that help alleviate that energy poverty and poverty in general.
Thank you. Well, we're almost out of time, so I'm actually going to suggest that rather than taking questions on the panel, come and speak to the panelists afterwards. But since there are quite a lot more people in the room than there were at the beginning, I'm going to ask you to put your hands up again. So those who were here bright and early, thank you. I asked for your views about the future of African utilities. So I'll put another question there. Let's look at the distributed energy or energy access sector, which we've been talking about here. Do people think in 5 years' time the climate for that sector will be better or worse? Who thinks it'll be better in 5 years' time, on average across the continent? Hands up. Okay. Pretty good share. I think we're calling about half. Who thinks it'll be worse? Not many. So a lot of don't knows. Well, thank you very much. A relatively good side for the panel. Thank you for your great contributions, and we'll move on to the next session. Thank you.